As of today, Thursday, December 25, 2025, the market is currently closed for the holiday, but Lam Research Corp, trading under the ticker LRCX on the Nasdaq, finished its most recent session at exactly $177.33 USD, marking a steady gain of 1.24% or 2.17 points for the day. While most investors are looking at their holiday trees, the real action for Lam Research has been a vertical climb that defies the usual semiconductor gravity we saw throughout the middle of the year. Most people look at an equipment manufacturer like this and see a boring industrial company that sells big machines, but the reality is far more aggressive. The current price level puts Lam Research in a position where it is effectively the gatekeeper of the next generation of computing. If you think the surge in NVIDIA stock was the only way to play the hardware boom, you're looking at the finish line instead of the starting block. The surprise here isn't just that the stock is up, it's the institutional velocity behind the move. In the last few trading sessions of December, we've seen a massive rotation into wafer fabrication equipment as the market begins to realize that the bottlenecks in high-bandwidth memory aren't going to solve themselves. Lam Research is sitting on a proprietary throne because of their dominance in cryogenic etching. This isn't just a technical detail, it's the only way the industry can physically manufacture the deep, high-aspect ratio holes needed for 3D NAND and the latest HBM3E stacks. The market expected a slowdown in China to cripple the top line, but the reality is that domestic demand for advanced packaging in the US and Southeast Asia is absorbing every spare unit Lam can produce. The general belief about Lam Research stock is that it's a cyclical play, a company that thrives when Intel or Samsung decides to build a new factory and starves when they don't. That old logic is failing in the current environment. We're seeing a decoupling from the traditional boom-bust cycle because the complexity of chip making has reached a point where you can't just buy more machines. You need Lam's specific atomic layer deposition tools just to keep the yields from falling off a cliff. When you look at Apple stock or even the broader indices, they are reacting to consumer demand, but Lam is reacting to a fundamental shift in how matter is manipulated at the molecular level. This is why the institutional volume in LRCX has stayed consistently above the 30-day average, even as other tech giants saw a year-end taper. If you're using online investing tools or platforms like Fidelity or the Robinhood app, you've probably noticed that semiconductor equipment has become the steerage of the tech sector. While the flashy AI software companies get the headlines, the individual brokerage accounts that are actually winning are the ones holding the companies that provide the tools. Self-investing requires a bit of a contrarian streak right now. Everyone is chasing the software layer, but the hardware layer is where the pricing power actually lives. Lam Research has been able to maintain gross margins north of 50%, specifically because their customers have no other choice. If you're a chip maker and you don't use Lam's etch tools, your scrap rate will be so high you'll be out of business within a quarter. Interactive brokers and other sophisticated trading platforms have shown a significant uptick in long-dated call options for LRCX, suggesting that the smart money is betting on a massive first-quarter blowout in 2026. This isn't just speculation, it's a reflection of the reality that wafer fab equipment spending is projected to hit an all-time high of over $100 billion in the coming year. When you compare Lam Research to something like Schwab Intelligent Portfolios or a standard robo-advisor, the risk profile looks different because Lam is effectively a tax on the entire industry's progress. Whether NVIDIA or AMD wins the GPU war, they both need the chips that Lam's machines help create. Let's get into the nitty-gritty of the recent daily swings. We saw a brief dip earlier in December when rumors of stricter export controls to China hit the wires. The market panicked, expecting a 30% hit to revenue. However, the reality surfaced in the recent 10K filings. Lam has already diversified its footprint so deeply into the Silicon Forest in Oregon and its new facilities in Malaysia that the China exposure is becoming a secondary narrative. Institutional activity shows that for every share dumped by a retail trader on bad news, 3 shares were picked up by pension funds and ETFs like Fidelity ETFs or specialized semiconductor funds. This is a classic accumulation pattern where the floor is being raised by big players who aren't looking at the next 5 days, but the next 5 years. For those of you looking for investment help or browsing investing sites for your next move, consider the installed base argument. Lam Research doesn't just sell a machine and walk away. They have over 90,000 chambers currently active in fabs across the world. Their customer support business group, which handles spares and services, now accounts for a massive chunk of their revenue. This is high-margin, recurring revenue that makes them look more like a software company than a hardware manufacturer. It's a safety net that most people ignore when they see the stock price moving. Comment below how many shares of Lam Research you currently hold or if you're waiting for a specific dip before you enter. The business model here is straightforward but impossible to replicate. Lam Research focuses on the etch and deposition phases of semiconductor manufacturing. Basically, they use plasma to carve patterns into silicon that are thousands of times thinner than a human hair and then deposit thin films of material into those grooves. As chips move towards 2-nanometer processes, the margin for error is 0. This is where Lam's reality hits the expectation of the market. The market thinks any equipment maker can do this, but the reality is that Lam holds patents on the specific chemical vapor deposition processes that make advanced AI chips possible. Without them, there is no high-end hardware for SoFi or Robinhood investments to trade on. Looking at the broader macroeconomic pressures, the interest rate environment has actually been a hidden tailwind for Lam. While higher rates usually hurt capital-intensive businesses, the major chip makers are so flush with cash that they are self-funding their expansions. We aren't seeing the typical slowdown in capital expenditure. Instead, we're seeing a race to the finish line. Every major tech company is trying to build its own proprietary silicon, and they are all knocking on Lam's door to get the necessary equipment. This creates a backlog of orders that gives the stock a level of earnings visibility that is rare in the tech world. In the past, Lam Research had some lean years, specifically when the memory market would crash, but the current memory market is being pulled upward by the demand for HBM. The old memory is a commodity story is dead. Now, memory is a high-performance component that requires the same level of precision as a high-end processor. This shift in the memory sector is the single biggest driver of Lam's recent record revenues. They managed to hit $18.4 billion in fiscal 2025, and all indications suggest they are on track to shatter that in 2026. As we look towards the future outlook, the catalysts are lining up perfectly. We have the transition to gate-all-around transistor architectures and backside power distribution. These are 2 massive technical shifts that will require an entirely new set of tools. For an online investing enthusiast, this means the replacement cycle is starting all over again. The machines that worked for 5-nanometer chips won't work for what's coming next. This guarantees a steady stream of orders regardless of what the general economy is doing. The risk, of course, is the geopolitical tension surrounding Taiwan and the potential for a global trade war, but even in that scenario, the onshoring of chip manufacturing to the US and Europe would require a massive purchase of new Lam equipment to fill those new factories. If you are using a SoFi active investing account or a Fidelity trading platform, you need to watch the book-to-bill ratio very closely in the next earnings report. If that number stays above 1, the momentum in this stock is likely to carry it past the 200 USD mark before the end of Q1. The tension between the expectation of a sector peak and the reality of a structural shift is where the profit is made. Most people are waiting for the bubble to burst, not realizing that we're not in a bubble. We're in an infrastructure build-out that is as fundamental as the laying of the railroads. To summarize the central insights of where Lam Research stands today, it is clear that the company has moved past being a simple cyclical equipment provider. It is now a critical infrastructure play that sits at the center of the world's most important supply chain. The stock's recent movement to 177.33 is a reflection of a market that is finally waking up to the recurring revenue model provided by their massive installed base and the indispensable nature of their cryogenic etching technology. While general expectations often point towards a cooling off in the semiconductor space, the reality on the fab floors tells a story of desperate demand and technical hurdles that only Lam Research can clear. Whether you are using a SoFi active investing account or a Fidelity trading platform, you need to learn that the foundation of the tech sector is often more lucrative than the shiny objects built on top of it. Lam Research has demonstrated that it can weather geopolitical storms and supply chain disruptions while maintaining record profitability. The contrast between the cautious market narrative and the aggressive reality of their financial performance creates a unique opportunity for those who are paying attention. The upcoming year will likely be the ultimate test of this thesis as new